traders at UBA say they expect Nigeria's fixed income market to remain volatile next week as traders continue to reposition ahead of the credit of the CBN's special bills, with patterns leaning more to significant sell downs of current portfolios so as to create credit and enjoy the new yield levels. I have Gbemisola Bello-Aromire. She joins me now. She's a fixed income dealer at UBA. She joins me now to give us more on what to expect in the markets. Thank you so much for your time, Gbemi, today. And let's start with that. What your expectations are from this special bills we're looking at from the central bank.
So in the fixed income market all week, we've seen scanty deals. As we all are aware, investors have sought better alternatives outside the fixed income space. But in the course of the week, traders, however, became optimistic, as you rightly said, because of the release of the CBN circular on issuance of CBN special bill for excess cash reserve requirements. On the back of this circular, we saw yields trend slightly higher in the secondary market, especially from local banks and offshore investors who were the holders of the current OMO bills. Offer, however, improved, but there were little or no bids in the market. For this circular, market perception and their interpretation is that there will be increased supply of bills, which will further deepen the market and trigger increased trading activity. However, we saw more, and we also saw more market presence from all interested parties. But as market went on in the week and we're uncertain as to what yield these bills will be issued at, we saw a lot of traders recoil and became more cautious, even though markets still remain bearish in anticipation of this news. Markets is awaiting further clarifications from the Apex Bank on the modalities of this circular, how bills will be traded, and what yield these bills will be issued at. What we know currently is that it's a zero coupon with an implied yield. We know it will qualify as liquid assets. So all this still chosen on uncertainty as long as we don't know what the rate will be at. Yesterday, however, there was an OMO auction where we saw 70 billion on offer.
All right, continue about the OMO auction.
Okay, so I said yesterday there was an OMO auction which 70 billion was on offer across the three maturities. On Tuesday, we had 418 billion maturing to the system, but we only saw 60 billion sold at the OMO auction. And we saw that yields also trended lower at the stop rate. The 124 days dropped to 1.99 from 2.20. We saw the 194 days drop to 4.85 from 5%, and the 362 days also dropped to 6.24 from 6.44. This action means that some level of liquidity still remains in the system, and we don't know whether they would mop it up by CRR. But against the circular that has come out, we await the decision from the Apex Bank.
All right, still on more moves from the central bank here. We saw that amendments in procedures of the receipts for diaspora remittances, and we saw that knee-jerk reaction in the markets the other day. But do you think it's going to be more knee-jerk as it is, or is it going to be more sustainable the way we're going to see the Naira strengthen?
Okay, so yes, the circular on the IMPO is the policy in a good direction. We saw the knee-jerk, as you rightly said, from 500 level to 480. As of yesterday, we also heard that rates trended lower to 470 Naira to a dollar. It still shows that this market is susceptible to shock. The supply coming in from this remittance might not be as huge as what would be the supply that will meet the demand at the FX market, but at least we know that more of these diasporans will be willing to send money home, knowing that they will enjoy Forex at market-reflective exchange rates. We know that also going forward, this will relieve the FX market from the bottleneck and not creating a market outside. As long as there's more clarity on the FX market, I know that it will translate to better rates. It might not be an immediate thing, but as long as there's more liberalization in the FX market, there's increased transparency, across time, we know that rates would begin to appreciate, and we might end up even seeing the convergence between the official and the unofficial rate. So as I said, it's a good start. Flows will continue to increase significantly. It's a move in a good direction. And all this, as I said, will help our image. Maybe it will also be able to attract more STIs into the system as long as they can see inflows coming in. So a knee-jerk reaction initially, but still at 480 levels, we're not going to go back to 500 as we speak.
All right, I guess we have to wait and see how things play out into next week. Thank you so much for your time and contribution on the show. Gbemisola Bello-Aromire is a fixed income dealer at UBA.